The chaotic trading week is drawing to a close, and the United States stock market is struggling to digest all the hints from the Federal Reserve speakers. In the absence of significant data, the market was entirely focused on comments from the members of the Federal Reserve, which blurred their bright prospects. On Thursday, Jerome Powell also shifted to a risk-friendly tone, disappointing the market but not leading to depression. A new day promises sluggish trading for the American market and a search for balance. The analysts at InstaForex are ready to present their perspective on the trading day. This is a review of the US market. So, welcome, dear traders. After a significant rally on Wall Street last week, the momentum slowed. Each of the three primary indexes closed in the red, and the SP 500 halted its 8-session winning streak. At the close of the market, the benchmark index fell 35 points to 4,347 points. Prior to Friday's closing bell, market leaders had managed to recover some of these losses. Index futures were up between 0.15 and 0.28%. For the S&P 500's trading outlook, we foresee movement from 4,340 to 4,378, with a potential rebound to 4,488 points. Yields on the Treasury bonds increased on Thursday following an underwhelming 30-year bond auction. Additionally, Federal Reserve Chairman Jerome Powell's comments tempered the overly optimistic expectations about future interest rates. Powell indicated that the central bank's officials aren't fully convinced that the current interest rates are adequate to keep inflation in check. He emphasized that the bank is prepared to tighten its policy further if deemed necessary. It's noteworthy that the fundamental market prices remained largely unchanged following Powell's address. Futures for the end of 2024 still suggest an interest rate of 4.50 to 4.75% as opposed to the current 5.25 and 5.50%. Before the Federal Reserve Chairman's speech, stocks had risen against the backdrop of softening economic data, including the monthly employment report. The Department of Labor revealed that the number of unemployed benefit claims last week dropped to 217,000, indicating that layoffs have not yet accelerated despite signs of a cooling labor market. The Treasury bond market weakened due to the low demand at the most recent long-term bond auction. The yield on a 2-year Treasury bonds jumped by over 10 basis points in a single day, exceeding 5%, and the yields on a 10- and 30-year bonds increased by 12 basis points. All 11 key sectors of the S&P saw declines, with the healthcare and the consumer segments leading the fall. Among individual corporations, Walt Disney shares surged by 6.9% due to quarterly profits and the fact that Hollywood actors reached a primary agreement with the major studios. Wall Street futures were sluggish but positive on Friday. The aftertaste of a Powell speech lingered, but investors seem to have shifted their focus back to data, looking ahead to the next week. This week was relatively calm on the economic data front, but next week promises to be more eventful for investors, with the release of consumer and producer price reports as well as retail sales data. These reports are expected to significantly influence interest rate projections in the run-up to the Federal Reserve's meeting in December. Market volatility spiked following Powell's speech, yet there is a growing consensus that interest rates might hold steady in the near future, especially with inflation trends suggesting a continued decline. And today, traders are also anticipating insights from Lori Logan, and president of the Dallas Federal Reserve, and Raphael Bostic, president of the Atlanta Fed. Furthermore, the University of Michigan will share its preliminary consumer sentiment index for November, though this data is unlikely to sway the market substantially. As for Wall Street, major movements are not anticipated today. The focus is on stabilizing the indexes, particularly as various U.S. government institutions are closed in observance of Veterans Day. The currency market today showed limited activity. Major trading assets retraced a bit following the dynamic shifts on Thursday, with the dollar losing its hold against most major pairs, the euro being the exception. Consequently, at the start of the US trading session, the USDX found itself 0.08% lower, trading around 105.80. The forecast for the index is expected to hover between 105.57 to 105.90. Despite Friday's relative inactivity, it's been a notably successful week for the dollar index. The American currency benefited greatly from the more hawkish stances of the Federal Reserve members, with the Powell's contribution cementing this trend. As a result, the dollar index is poised to a substantial weekly rise of over 0.7%, marking a strong recovery from last week's downturn. The Canadian dollar is once again trading upwards despite the rebound in oil prices and the American dollar's relative weakness. These factors haven't helped the loonie recover from its series of losses this week. By the time the US markets opened, the USD CAD pair was trading at 1.3819, up 0.10%. The trading outlook for the session places the asset within the range of 1.3790 to 1.3838, and this week the loonie has lost a significant portion of its value. Even with the Friday's rebound in oil prices, the asset is still feeling the effects of earlier declines, and this situation is further compounded by the growing strength of the US dollar, which continues to put pressure on the Canadian currency. In contrast to other markets, the cryptocurrency market today continues its frenzied rally, fueled by the excitement over the approval of an ETF. Despite Bitcoin retreating from its peak in the previous session at 37,978, the asset remains confident. As the US markets opened, the leading cryptocurrency was up by 1.2%, trading at around 36,900. Other major assets in the market also mostly showed positive dynamics. Analysts predicted that Bitcoin could move within the range of $36,900 to $37,300, and the most optimistic scenario suggests that bulls might try to approach $28,000 again, while the alternative scenario indicates a potential drop to between $26,400 and $26,200. The surge in the digital asset prices comes amid rumors of the imminent approval of a spot Bitcoin ETF by BlackRock, with the asset management giant also registering to establish an Ethereum fund. And this has been today's analysis from InstaForex analysts. If you have any questions or would like to share your thoughts, feel free to leave a comment. We are always open to feedback. Don't forget to subscribe and turn on notifications to stay informed about the latest market trends and changes. Have a great weekend and see you online again on our channel on a Monday.